Now, first up, besides being in the bottom of a cyclical downturn, construction companies also have the findings of the Competition Commission to deal with. The Commission has been investigating collusion in the pricing of tenders for large projects and intends to fine competitors based on the extent of their involvement. So does this present a good time to buy these companies? Abdul Davids joins us from Cape Town to weigh in on the subject. Abdul, thanks so much for your time with us today. Let's begin with your thoughts on the construction industry.
Thank you very much. Yes, I think the construction industry is quite a difficult one to analyze, because we had quite significant infrastructure spending, most notably on the construction of the World Cup stadiums, as you remember. And that, I think, clouded the revenues that these construction companies earned. On top of that, as you say, there's obviously a whole host of issues around Competition Commission. I actually think the fines themselves might be small in relation to the ultimate investment sort of case for these companies. I think the bigger issues around the impact on margins of effectively the carving up of the market segments that these construction companies are alleged to have done in the past.
Abdul, we've seen this movie before with construction companies getting fined, and I just wanted to ask you, is it the nature of the industry, the structural nature of our industry, we've only got 5 or 6 really big construction companies that can fulfill some of these projects, that we seem to have this issue coming around every so often where we have to deal with either collusion or some sort of fixing of prices around these projects?
Yes, very much so. And if you look at other industries as well, even as far as the milk industry and the bread industry, I mean, it's the Competition Commission itself is, I would think, a fairly new phenomenon in South Africa, having been created effectively in its current form post the '94 elections. So clearly in the past, what you would have seen is that a lot of these companies in the various respective industries would have had what they call gentlemen's agreements, where they would say, okay, you cover this market, I cover that market. Even in the cement industry, we know that the likes of PPC and NPC and all of these various cement companies. And I think it's such an ingrained thing in the psyche of a lot of these companies in these industries that it's a very difficult thing to dislodge and to obviously restructure. Clearly, with a lot of the management of these companies, they would have thought that they did nothing wrong, for example. So I think you're up against that. On top of that, you had a situation where, as we know, there was a skills shortage. A lot of the labor was imported, and we had a construction boom lasting from 2003 to about 2007. During that period, obviously, everybody was very busy. So theoretically, contracts were passed over to competitors in exchange for other contracts. So that all clouded sort of the revenue shares that the various companies had. On top of it, we had a situation where certain companies were obviously, they had questionable accounting practices as well, to put it mildly. And I think that also clouded the earnings for these companies as well.
Abdul, it just seems to me that the Competition Commission, while it is still an institution that's very new in our country, it seems to be just treating the sort of symptoms at the moment. How do you think we can get around this issue? Because it's not good for the taxpayer. It's certainly not good for investors who, I guess like many people are thinking now, perhaps we should make an investment into construction, considering that it's at the bottom of the cycle. But you still have this issue looming above it regarding the fines. And we saw Stefan Uti providing for a potential fine from the Competition Commission in the hundreds of millions of rands. So from your perspective, just on the investment case, should the competition, is there another way of actually challenging this issue?
First of all, from the company's point of view, I think some of them have provided for some sort of fine. Now, what they don't do is they don't disclose the quantum, because clearly if the Competition Commission find out how much they've provided for, that might be the fine or multiples of that. So clearly they're not going to tell us exactly how much they provided for. What is quite clear, though, is that, and I think, the historical sort of precedent is that it's normally some percentage of revenues that they get fined. Now, if you take 10% of revenues, it could be anywhere from R1 billion for the smaller guys to up to 3-4 billion rand for the bigger guys on South African sort of revenues. I think that is actually a smaller issue. The bigger issue is the impact on future profitability, given that we know now that it's unlikely that the same magnitude of contracts would be awarded. And I think the investment case is really centered around that. And I think what we've done at Kagiso Asset Management is really try and dissect the companies in terms of the revenue opportunity and potential, given that we know that there's still significant infrastructure spend to happen in the next 5 to 10 years.
So Abdul,
but then offsetting that,
can you
the
take
margin
us can you take us through the ranking from an investment case when it comes to the players in the construction space? Which is the best
unfortunately, we
investment
tend to
which is
focus
the
on the
worst
larger
investment?
Yes, that's a difficult one because we tend to focus on the larger ones. So if you look at the ranking purely on market cap, for example, I think Avenge and Murray & Roberts would obviously rank as the higher market cap ones. Group 5 would be up there as well. And then Wilson Bailey as well. So those are the top 4 ones, and then you get the second tier and the smaller ones. So if you just look at those 4, I think the one that has obviously had the most extreme price action is Murray & Roberts. I mean, it peaked at close to 100 Rand, I think, at the height of the boom, 2008, around about there. And is now languishing at about 22 Rand a share. I mean, the market cap is now sitting at just under 10 billion Rand. So I think from that point of view, it looks like there's value. However, the caveat is that they were probably one of the more guilty parties, if I can put it in that way, without incriminating myself here. But I think what has also been quite evident that, and it's on record that they had questionable accounting practices as well in the past. So, and that clouds the analysis in terms of looking at the investment attraction of Murray & Roberts in particular. In contrast, if you look at Avenge, I think Avenge is probably the more attractive one in the space. And the reason I say that is that, unfortunately, if you look at Grenke LTA, the South African construction division, their margins unfortunately has languished. And even today, they make about less than 3% margins, and that's operating margins, compared to Murray & Roberts at about 4.5%, and the others at around 5%. So I think that's normally indicated that clearly, potentially they haven't been overcharging. Maybe they had some cost issues around pricing for these contracts, but I think it's quite evident that a lot of the sort of benefits of the past contracts are not evident in Avenge. And as a result, your earnings base is probably more conservatively stated, and from there likely to grow faster compared to the other competitors in the space.
Abdul, we've also got the case of, in light of the very tough trading conditions the construction companies are finding in South Africa, there are many of them branching out, and one of them's been Wilson Bailey Homes. Has the extent of the growth in Australia impressed you with regards to that company, and is it one that you've been considering investing in or have bought into already?
Well, Wilson Bailey is an interesting one because it's a one construction company that hasn't had this massive rise and then fall in share price. In fact, it's trading close to its all-time highs. The earnings have grown fantastically well, and we have to credit management for that. I mean, obviously, it's trading on around 13 times P multiple. And clearly, earnings have grown impressively over the last couple of years. And they've been very prudent in terms of the way they've managed contracts in South Africa. They haven't had these massive booms and busts in terms of having big ticket contracts with very little profitability to show for it. Also, they're much more in the residential market, both in South Africa now, as you say, in Australia as well. And Australia, as we know, its proximity to China means that its economic growth has probably been, if I can call it, shielded from the rest of the global financial crisis, from the fallout that we've seen in Europe, etc. And as a result, the residential sort of construction market in Australia has